Time now for Money, Power, Politics. And tonight, we start with this headline from the New York Times. Quote, Trump is winning his trade war. What will it mean for the actual economy? We've seen him use his leverage to announce new trade deals around the world that include big tariff rates, levels that would have seemed unimaginable 6 months ago. Let's be clear. Trump is remaking the world economy around tariffs, something he has been talking about for more than a decade. He is defying expectations, and right now the U.S. economy is holding up. But the big question is, how long will this last? There are plenty of unknowns swirling around the so-called deals themselves. Will they even hold up? Many of the deals are light on details, and countries could push to rewrite them when they have the leverage. In some cases, like with Japan, it seems like these two countries cannot even agree on what they agreed to. As far as all of these promised investments go, we might not actually ever see them. You might remember in Trump's first term, he struck a deal with China that included a promise to purchase $200 billion of American exports. That never happened. And then there were these tariffs that are already directly impacting Americans. Procter & Gamble says that people are spending less, shopping less, and only buying things they really need. Remember, these are 10 and 15% tariff rates in the trade deals that are still huge increases. Yes, they're not 50%, but 10% is still big. That means that American companies, big and small, are suddenly facing much higher costs, leaving them to decide whether to swallow that cost and lay off workers or pass it on to you, the consumer. So Trump may be winning, but are Americans? What about us? Joining me to discuss, Dan Nathan, CNBC contributor and co-host of the Risk Reversal podcast, and Natasha Surin, former Treasury official and Yale Law professor. What's your thought? Trump says he's winning the trade war. He is getting trade deals or frameworks done.
Right. They're frameworks, right? So when we think about just going back to the first administration, when they first slapped tariffs on China, it's 2018. It was March. We didn't really have a phase one deal in place with China until January of 2020. So you kind of just laid it out here. We have a deal supposedly with Japan. We have a deal with the EU. If you think about those two blocks, they're about 25% of the imports that we get right here. And we just don't really have a lot of detail about that. So what hasn't come to the table right now? It's Canada and Mexico. They're about 25% of our imports. Those are two of our best allies here, right? And so this week, the focus has been on China. Well, they're about 10% of our imports. So when you think about the Chinese, you think about how nothing's really happened over the last, let's call it, week or so as we've kind of had these talks here, especially in Stockholm over the last few days. You have to ask yourself, if you're the Chinese, why are you rushing to do a deal if we are not even able to do a deal with our two biggest trading partners, which is Canada and Mexico? So I think there's not going to be a lot of there. And just really quickly on your point about who's winning right now, because the economy, what is our economy saying? Well, right now we saw a huge pull forward. A lot of American companies were buying goods. A lot of consumers were buying goods right before these tariffs might go in place. And therefore, you've seen artificially inflated numbers, whether they be by companies and their earnings or by our GDP that we're going to get a read on tomorrow. But the real reason that the Fed is staying on hold, we have a Fed meeting tomorrow, is because they have to see what the inflationary pressures are going to be. You just said Procter & Gamble. These are staples. They're raising prices. They're passing it through to consumers. These are all the reasons why the Fed is on inflation watch here, and that's going to be the thing, the bugaboo, I guess, for the U.S. economy. If growth starts to slow, but inflation starts to tick up, we have stagflation.
Well, it's, what does winning a trade war look like? The Yale Budget Lab has a new report out laying out the impact these tariffs are having actually on us, not just headlines. Break it down for us.
Yeah, so first fact that we should all kind of wrap our heads around is no one actually wins from protectionism. So there are no winners from a trade war. Some numbers that my colleagues and I have put together that I think can provide some helpful context on where we are today. We have effective tariff rates in this country as of current that are about 18%. That is up from about 2.5% at the beginning of this administration. Those effective tariff rates are going to lead to price increases on literally everything that Americans buy, on the order of magnitude of something like 35% for apparel or 12% for consumer electronics. And the reason why those price increases are going to exist and maybe haven't fully kicked in yet in some sense in certain industries like apparel is because there has been this pull forward of inventory in anticipation of these tariffs. What importers were trying to do was try to kind of pull in as much as they could into the economy in order to have to avoid the fact that ultimately they are going to have to raise prices because there simply is no way to eat a tariff of 18% when you were operating in a world that was more like 2 just a few months ago.
Yeah, and to your point about like what consumers or what's going to be passed through by companies who are buying this stuff, just today in the stock market, this is a lens that I often look through. You had UPS, the stock was down 10% after their earnings based on some supply disruptions, supply chain disruptions, weaker kind of demand, that sort of thing. Whirlpool, right? They make a lot of, appliances that go into homes, that sort of thing. That stock was down 13% after their outlook, right? We saw Royal Caribbean. This is a space that has been travel, has been a really hot space over the last year or so. That stock got clobbered based on their outlook. So we're starting to see a lot of companies speak to this. You just mentioned Procter & Gamble, and I could give you a number of examples over the last week or so. Some real American companies like Lockheed Martin and GM and IBM and Intel, these companies have been getting clobbered based on their outlook. So you're starting to see the companies speak to it. The stock market, though, is still 1% from its all-time highs. It's still up 30% from those April lows.
But that's also because when you talk about the stock market, it's a few overweight companies that are doing phenomenally well. And when you look under the hood, there are all sorts of companies struggling.
Also, a piece that's important here is the companies are obviously reflecting this in their outlooks. But Stephanie, we're talking a lot about like what the American consumers are actually starting to feel. And if you look in particular industries, we were all just talking about our children, durable goods that children and kids use are in 90% of those are imported. And so the result of that is we already know that Americans are feeling this when they're looking at the prices of things like strollers or car seats. There are double-digit price increases already that they've experienced. So I think we're in a world in which consumers are actually starting to feel this really substantially. And to give the Trump administration credit, actually, where credit is due, our Budget Lab estimates are that they're on path to raise something like about $3 trillion over the course of the decade from these tariffs. The problem is, and that's a great thing to do, by the way, especially in an environment where you have
But it depends on who they're getting it from and why.
Exactly. The problem is this is a very bad way to raise revenue, right? We obviously need to raise revenue. We're in a difficult fiscal position, but raising revenue disproportionately from low and middle income Americans, who are the ones that consume the most of their income, just isn't the right way to go about revenue raising, and also doing it in such an inefficient way with tariffs that are this tool that really cause a ton of distortions in the economy.